What's up, traders? Today I want to go over adding to your position. Uh, it's something I preach: never add to a losing trade, and I'll touch base on that on if I ever do, because I completely contradict myself, but I do, but a very specific way. Uh, but adding on to a winning position can just multiply your wins, and it is something I do. If it's a longer swing trade, anytime I see consolidation and it still pulls ahead, I add to it. So what we have here is an open trade right now. This is a live trade in my challenge account. This is the British pound US dollar. I originally entered this trade right here at this first yellow zone. Let's see, 139.264. Once when you add to it, it averages. So as you can see, my average price is up here at the 140 range. So we originally entered here. We saw a little bit of a pullback, came up, and then it shot up, and then again another pullback, but it showed signs of consolidation, so I added in. At this point, I moved my stop loss up to a break even. If it went down, I didn't want to lose all my profits. When you add to your trade, the downside is you'll start canceling out profits real fast. So everything just moves faster. What you were making just doubled, and then what you were losing will also double at that rate. So anyway, this trade's going good for me. It shoots up again and again. It does experience another pullback. This giant wick made me a little nervous, but I knew there was going to be a pullback here at this price level. So we get down here. I entered in again, came back up again, moved all my stop losses up to here. You can still see them live, some of them. Each time I'm adding, each one of these is a different order that I'm adding to it. So right now, it pulled back and held it, and then I added in another position. So still at that same price point. Just move that there. And then you can see it's going up here. We broke above this zone right here. We're in it right now. At this point, I do have some stop losses set right here, and we're just going to take it. If it pulls back again and it shows more signs, if it can't break this zone, I'll add in again, and I'll just keep this profit. That is the icing on the cake when you can close a trade out, take all your profit, and when it pulls back, add in again and ride it up. It's risky to do because a lot of times it never works out that way. I guess I can't say never. It just a lot of times it doesn't work out that way. You pull out, you think you locked in all your profit, and it has the smallest pullback ever, and then it just shoots up and you locked in profit early, which it's never too early to lock in profit, but you are leaving money on the table when you try playing every spike like that. My original trade, this is a 30-minute chart. I don't know why it does this. So as you can see, this was my original trade. My take profit is right here in the 143. I do think it's going to go higher. At the same time, we are going to see a pullback here at this. There's no doubt in my mind at 143 we're going to see a pullback. So I am going to take profit here. Most of my position. It's going to pull back, and I'm going to enter it again. And I am going to try to play this one. I'm very confident if I take it at profit at 143 and it just keeps going, it's still a very good trade for me, but I am going to try to get just a little bit more. So when you're pyramiding, adding on your position like this, it's usually on swing trades. You have your higher time frame, you get your trade, your stop loss, your entry, your stop loss, your take profit. Then you can zoom in, close in on your time frames, knock it down from 1 day to 4 hours to an hour. I rarely ever play anything smaller than that. But as you can see, you start to see more candles. So at this point, you can see consolidation. You can see price movement a lot more. Once you zoom in too close, you're just seeing a bunch of noise, a bunch of back and forth, and you'll find a million patterns in there, but they're just not that good. I wouldn't play them. There's too much. That's where the retail traders are at. They're in and out of everything all day. and so it's just a lot of up and down for nothing. So as you can see, the daily, you didn't see all this, but you saw my entries. But as we zoom in, and the more we up, not upper time frame, more we down our time frame, you'll see there's more consolidation each time it's clear. It looks a lot better looking back, but keep in mind, when I'm in this trade, all I'm seeing is this last green candle. Not necessarily playing on hopes and dreams. I'm just hoping it turns around here because that's when I'm entering. I do like to get the low spots. So when I'm doing this, when I add on, my stop loss is pretty tight. Once it creates a new low, it pulls back and it starts to stop. It starts to consolidate. That's when I add in once it goes up just a little bit. But I set my stop loss at any new low from that last pullback because I don't want to cancel out all my profits. So that's what I'm doing each time. That's how I'm able to make quite a bit more on any successful trade. Any trade I have open for a while, I've added to, and it makes so much more. So one thing I preach is never add to a losing trade, and that is something I do in a very specific way. So let's zoom in. I'll just pull up, we'll just keep this same one. Where's my first zone? So if you're going to add to a losing trade, just to keep this as an example, let's say you enter here, you're in this zone. Your stop loss is right here. There's your stop loss. You are about to hit it. You're about to tag out. You have this stop loss based off of price action. This is a known support. If it breaks this, it's a new low. It's not just a random stop loss. It's not just some 1% or you didn't want to lose more than 20 pips. This is a reasonable stop loss. I want to get that into everybody. When I say in my videos, when I'm talking, I tell people in my trades, if it pulls back to here, I'm good. I'm good because I base it off price action. So if it breaks that, the trade just isn't working right, and I'm out. That's it. No big deal. So your stop loss is here. It's not off some number you pulled out of the sky. There's reasoning behind it. I add to it. I sort of double down. I hate to use gambling terms because that is how you lose. Let's say you entered here, and it pulls back to here. It hasn't hit your stop loss. I double down. I add in a lot more, but I keep the same stop loss. So I enter. If it pulls back and creates a new low, it does pull out. It adds a little to my losses, but it doesn't break the bank. But if I double down, a lot of times it pulls back. Doubling down and it pulls back, it only has to pull back halfway for you to break even. At that point, I'm following it with the stop loss every time because I'm in the red. It's not doing good. Right now I'm in recovery status. So I'm not banking on that trade shooting up. If it does, it would be awesome. But for this one, I would have entered here. I would have doubled down right here. And once it got up to my original spot, I would have closed out my original position. I would have just accepted the lower entry. I would have just got a better rate. That's all. Because the last thing I'd want to do is, again, pull it back even more and then give it all up. I've already taken my chances. I've got it back. I'm not going to be greedy. So enter here, stop loss here. I'll double down right here. And once it pulls back, if it pulls all the way up, then I've closed out my original position and I still have the entry here. So 2,000 here, another 2,000 here. My stop loss would have trailed it all the way up. In this particular trade, I would have been good. I would have came back up here. I would have closed this one out, and I'd have rode it right back up. I didn't know. I wasn't worried about this. My stop loss wasn't even here. It was quite a bit lower, actually. But I had a small position. It was still 1%, but my stop loss was, here we go. My stop loss is down here. Once it broke that, this zone right here, that's what I'm looking at. So if we see all of this, that's what I'm looking at. We got a high, we got a low. Once it broke that, it pulled out and it retested here. Once it broke that, then it's going down. I have no reason to stay in it. I'm locking it in. So that's where my stop loss was at. Which I guess wasn't that far off, actually. Okay, so yeah, I wasn't close to doubling down. I do watch all my trades. because when something does get close to my stop loss, I manage it. I pull it out, look at everything again. I see what news hit, if there's a catalyst, and then I make the decision to add in. I don't do it every time. It is case by case, which is why I preach don't add to a losing trade. You've already lost. Maybe it'll turn around. Don't give up yet, but don't add to it. In this case, I wait till it's right above it, and then it's my last ditch effort. So I wanted to show you guys that while this trade was live. I don't want to do a bunch of live trades yet. I want to get as much educational stuff out. So when I'm showing you guys my analysis, when I'm doing my weekly, just looking at charts and going over it with you guys, I want you guys to know why I'm saying what I'm saying, why I'm picking the numbers I'm picking. They're not just out of thin air. I don't just think it looks good. I don't like just the colors. I don't use, what's a popular one? I don't use Bollinger Bands. I don't use that. I do like to confirm what I'm seeing with Fibonacci sometimes, the moving average lines. But everything I do is based off price action, and everything has a plan. So I want to preach that to you guys, and you guys follow the same so you can be successful. Everything else is just a trap. Hey everybody, thanks again for watching the video. Please show your support. Hit that thumbs up button for me. Comment down below. Subscribe. Hit that little bell button if you want to be the first ones to view the next video. And if you want to see any more, check out my website. The link will be in the description. If you'd like to reach out to me personally, my email is also in the description. Reach out to me. I'll get back to you as soon as I can and help you out with any questions you have. Again, let's lock in profits, not losses.